Hello everyone, welcome back to our stock analysis channel. So what happens when the world's largest defense contractor stumbles on execution but keeps winning massive government contracts? Today, we break down Lockheed Martin, ticker LMT, and whether the recent dip is a buying opportunity or a value trap. Alright, Lockheed Martin is the world's largest defense contractor. Everybody knows it, right? Valued at roughly $118 billion. They built the F-35 fighter jet, THAAD missile defense systems, Aegis combat systems, and they are the prime contractor for the US nuclear fleet ballistic missile program. With a record backlog near $186 billion, they have multi-year revenue visibility that most companies can only dream of. Right, this is a big order. Very big. Alright, let's break in its fundamental catalysts. Here are 3 recent catalysts you need to know. First, in early May, Lockheed was awarded US Space Force contracts for space-based interceptor development, a critical layer of next-generation missile defense. This positions them at the center of the Pentagon's evolving homeland security strategy. Secondly, they just signed a $1.5 billion contract with the let me see, not here. Yeah, still this one. They just signed a $1.5 billion contract with the Peruvian Air Force for 12 F-16 Block 70 fighters, the first direct commercial sale of F-15s in decades. This opens up Latin America as a fresh growth frontier. Third, management reaffirmed full year 2026 guidance despite a massive Q1 sales of 77.5 to 80 billion, earning per share of almost $30, and a free cash flow of 6.5 to 6.8 billion dollars. That confidence matters, especially after Q1 saw negative free cash flow of $291 million due to ERP system timing issues, which they expect to resolve by Q2. Well, the bear case, Q1 earnings missed. Earnings per share came in at $6.44 versus the $6.8 consensus, driven by the cost overrun on fixed price contracts, particularly the F-16 and the C-130 programs. Margin compressed from over 13% to 11% year over year. This is all about its fundamental. So we need to diagnose, is this a buying opportunity or value trap? Let's have a look at the chart. LMT is currently trading around 520 to 535 range. Here's the chart. Well, of its 52-week high near 690, the 20 days moving average sits near 530. I think it's close to 520. Right, and the price hovering right around this level, a key battleground. A sustained break above 535 could signal short-term stabilization, while failure to hold the 500 areas opens the door to deeper support, maybe to 450. Well, let's take a look at the RSI indicators. Neither overbought nor oversold, right? This means there is room to move in either direction depending on how Q2 execution unfolds. So what's the play? What's the play? LMT is a hold for existing shareholders, I think. The backlog and the defense spending tailwinds are real, but margin recovery need to be proven. For new money, this is a watchlist name, not a slam dunk buy. Wait for Q2's results to confirm that cash flow has normalized and that F-16 delivery issues are truly behind them. If the stock can reclaim and hold above the 20-day MA move average, with improving RSI momentum, that's your technical green light. Well, analyst consensus is hold, with the average price target around 600, suggesting a roughly 15% upside from current levels if execution improves. Alright, this content is for informational and educational purposes only. It doesn't constitute investment advice, and you should always do your own research or consult a licensed financial advisor before making investment decision. Okay, that's Lockheed Martin in other in these 7 minutes. If you found this useful, hit the like button and subscribe for more stock breakdowns. Alright, see you in the next one.